Hello, everyone. This is Realtor Linda Peltz. Today I'm here with Michelle from the Hero Loan Team, and we're going to talk about some loan rates. So, everybody, Michelle, take it away.
Oh, hey, thank you so much for having me. And it's always good to see you.
Good to see you.
I just wanted to, yeah, I just wanted to talk a little bit about, I came across an article that was talking about housing market. So when the rates increase, do the prices of homes increase, decrease, or stay the same? And there is a nice little graph. I'll pull it up in a minute here that kind of talks about that and just kind of shows where everything falls. And so I was really surprised to find out, especially because I hear in the market all the time that, oh, we're waiting for housing prices to drop. The interest rates going up are going to cause the housing prices to drop. Like, we're just going to wait until that happens. And what we have seen this year is the interest rates have slowly been creeping up just all year. And we've had
Yep.
some little dips,
And then they
some
just
little
sneak right back up
raises.
there.
That's right. And especially this month, it's like every day, it's like, ooh, another tenth of a point, ooh, another tenth of a point. So it's just kind of growing. And so it's easy to believe the hype and kind of think, well, if that's the case, then I'll just wait for a couple of months. That house that I want that was 400,000 will now be 400 or 300,000. And I'll just get, my dream house for a lower price. And the truth of the matter is that that's not at all what happens.
Doesn't work that way, does it? You just get
Right.
the best house, your dream house. You're right. Just now became 300,000, so you better find something there. And we just don't have much available. So,
That's right. So yeah, so those two things happen. One thing happens is that the interest rates tick up, and so your monthly payment now affords less and less and less. But also, the only time in history when there was actually a rate drop and a housing price drop was in 2008. And the really big motivating factor for that was that there was a ton of inventory. They had really bad, lending practices before 2008. A lot of people were losing their homes. And so that everybody was wanting to sell, and not really very many people were set up to buy because they had put in place all of these checks and balances. So the people who qualified for houses before didn't qualify for houses anymore.
that's a lot
And
frustrating.
so
Yep.
yeah, exactly. And so there were a lot of houses on the market that people wanted to sell, and there weren't a lot of buyers on the market snatching them up. So we had a higher supply than we did demand at that time. Now in 2010, 2011, when the market started to stabilize again and people started to wanting to buy again, interest rates went up, so did housing prices. Same thing happened. Now there's another little blip, another little anomaly historically, which is in 2020 when interest rates dropped and housing prices shot up like this. It's like boom, because
What does it boil down to? Supply and demand.
that's 100% it. Yeah. If we look at all of those historical trends, that is what is happening. It's supply and demand. So as long as there's less houses than people who want to buy them, then the housing prices will continue to go up. And we have been in that situation since probably 2010, 2011, where there's less housing than people need. And then in 2020, there also was sort of a freeze on building because of course people were staying inside. That's number one. But for two, the lumber and other supplies that people needed weren't coming in. So
Now they're so high, prices are skyrocketing still on those new builds because even though now they can get supplies, they're a lot more costly. So I don't
exactly, more costly, right? So that's where we're at. We don't have enough houses for the people who are on the market, regardless of how high we raise the rates. So we keep raising the rates, and the price of houses go up. So the bottom line is that if you can afford your payment right now on a house that fits your needs, maybe not all your wants, but all of
big
your
difference.
needs, Yeah, then we need to get into that house, because then we can start, and we've had this conversation before, we can start building that equity, and then we can use that equity to get into maybe the house of your dreams at that point. So
Eventually,
yeah,
or
right.
refi if the interest rates ever does decide to get that back down, we can refi them, and they can have a some equity start building up in that home to where they can use it for that future home that they might want, or different things. I know it's a continual battle we fight with these, and we still are in a seller's market. Granted, used to be 20-25 offers on a home. We're not quite that bad, but we still are getting 3 to 5 offers on homes, and there's just not that much inventory. So you're only having your choice of 2 or 3 homes in an area that you want to be in. That's just the way it is. So take what you can get now, and then, keep your, one thing I like to point out is, don't screw your credit. I mean, keep it up to where, when it does come to another point where you can get into another house, or a better house, or a bigger house, or whatever it is you're looking for, a house with a pool or whatever, then you're in a position to go ahead and take that plunge. So don't, think, oh, I'm in a house, I can do whatever now. No, be responsible. Keep that credit to where if you decide
Yes. Oh my gosh.
to do it, right? So
That is so true. I didn't even think about that. But yes, when rates come down, and they will, because we're a little bit higher than we have been for quite a long time. And so they will come down. We don't know if they'll come down in 3 months or 3 years, but they will come down. And when they do, like you said, I can already afford my housing payment when I decide to purchase. Or don't purchase. If you can't afford it, you don't do it. But if I can afford my housing payment, even if it's going to be a little tight, even if it's more than what my rent is, it's important to get in there. And now I have my housing payment. Now, a few things
it's not going
happen.
to go up, people, but it will. You can
Right.
eventually get it down if once you.
That's right. You lock it in. It's locked in. It's not going to change. And so while rents continue to do this, my mortgage just stays like this. So that even though your mortgage doesn't go down if you don't refinance, because there's not a lower rate, your mortgage stays the same. It doesn't continue to go up. So when rent prices go up around you, it does feel like your mortgage is cheaper, because other people are paid way more for rent for the same thing that you have and that you've purchased, a long time ago. 3 years ago, whatever. But nice thing, like you said, if rates go down, then at that time I can refinance, and I can either refinance the amount that I owe, and now my payment's lower because I owe less, and also because my rate is less. Or if I have some equity built up in there, like you said, I want to make an improvement on my home, I can take a little bit more out. I can do a cash out refinance. I've got a lower payment. I've got a little bit of money to remodel my kitchen or whatever it is I want to do. So it's just all a really good situation.
Do those
Yeah.
upgrades that you didn't get when you bought, that brand new or whatever it was that you were dreaming of that you couldn't afford. Now would be the time, do that cash out, and remodel it at that point, and make it to where it is whatever your dream home was. So
Right, add a pool or whatever it is that you want. Yeah.
I wish everything was handed to us right when we wanted it, but a lot of us have worked our whole life and still don't exactly have exactly what we want. But
well, right. Wouldn't we all love a house on Malibu Beach? But
I know, huh? I'd like my dream to come true too, but you gotta
yeah, and I would love to have it for $2,500 a month. That would be great.
I know it. Wouldn't that be nice?
Yeah, 100%. But I'm not going to get that anytime soon. But if I have invested in a property, I continue to pay that mortgage on time. Like you said, make sure you keep that credit good. I'm going to be closer. Maybe not ever Malibu, but maybe I can get a
I don't
house
think I'll ever
close
get
to
to
the
that
beach.
point, but some people
Right.
make it.
Yeah, but you might be able to get one in Santa Barbara or something like that.
I can touch you over
Yeah.
there.
That's right. That's right. It's only an hour drive. So yeah. So it's I also have this I can share real quick. I'm going to go ahead and share my screen and show the here we go. Entire screen share. And I'll just share that little chart that I pulled up. Sorry, I'm not always super great with technology. Oh, I thought it was right
We
there,
do
but
the
it's
best we
not.
can.
So, oh, here it is. Okay. Can you see that?
I can.
Okay, perfect. Yeah. So just kind of like what we talked, this part down here, the red part is
Mhm.
the financial crisis. That's when mortgage rate decrease and housing price decrease. Here's the other blip that I was talking about where mortgage rate decrease, but housing prices increase. And as you know, they increased dramatically, double-digit increases
It
in
did.
here. Everyone was having to pay, appraisal gaps. They were having to put more than the house was worth. It was really kind of crazy. This
It
is
was
the
crazy.
only, it was crazy. This is the only time here that the mortgage rate increase and the housing price just decrease. It's only 2010, 2011. That was when they were just kind of recovering from 2008, 2009. There were all of those foreclosures. People had invested in them. There was just a ton of stuff on the market to be sold. But this here is the majority of what happens here. Mortgage rates decrease, housing prices increase, mortgage rate increase, housing prices increase. So for the majority of this graph, you can see the top half here is when mortgage rates increase, house price increase, and so that is kind of historically the trend. So yeah, so like we've talked about, pause share, there we go. Yeah, so that's about it. If you're waiting to get a raise, if you're waiting to save more money, if you're waiting for housing prices to drop, typically those things don't really work. The inflation in the housing market
Buy the
outweighs those
house
factors.
within your means at the point you're at. Start building that equity. Keep your credit decent. And then at some other point, we can maybe actually get you closer to the house of your dreams. But you know what? You've had a roof over your head, because let's face it, if they're living in a rental, is it really the house of their dreams? So you'll at least be one step closer.
That's totally true. It is usually not the house that you really, really want when you're renting it. And that rent can always go up. And
it does.
um,
It's going
and
up
it
faster, I
does.
think, than your interest
Right.
rates are.
That's true. And you can still get the raise. You can still save the money. But that way, every time I pay the rent, I give that amount of money to my housing instead of basically throwing it in the trash or lighting it on fire. That's what you're doing when
Well,
you're
you're
paying
buying somebody
rent.
else's house. They're making off
The,
of you.
That's right. But for me, like, what's it doing for my net worth? What's it doing for my future? What's it doing for my investment? Absolutely nothing. But if I'm paying my mortgage, then I'm starting to build those things: net worth, future for my family, maybe an investment, just depending on how I decide to use it. So
Real
yeah,
estate
that's
is
about
one
it.
of the best and quickest way for financial security for your family. So
Yes, absolutely.
there's no
Absolutely.
other
So
investment out there that's tangible like that.
right. Exactly. And, if you want to start investing beyond that, of course you can, get another property rented out or start investing in other ways. But your first investment should always be what you own, your home, where you have to live somewhere anyway. So if I'm investing all this money in other areas and paying rent, it just doesn't make sense. Throwing away money.
So true. So true. Well, you're always a hoot, Michelle. I'm so happy you joined me today. You want to give your contact information and
Yeah, definitely. If you want to reach out to the Hero Loan Team, we specialize, of course, in Hero clients, military, medical, education, fire, and law enforcement. But of course, any occupation, we're going to give you the same great service. But for our Hero clients, we have a couple little perks. But you can reach out to me. My phone number is 559-314-6760. Call or text anytime. And otherwise, you can email me at michelle@heroloanteam.com.
And don't forget, people, even if you're a janitor at a school, you work for a school. So get a hold of Michelle.
Yes, thank you for adding that. Yes, and that applies to every category. You don't have to be the sheriff to
You don't have to be the fire manager or whatever.
Chief,
But
that's right,
fire chief,
exactly.
yeah.
That's right, totally,
You could
exactly.
be
And you
the
know,
office gal in the fire department or something. So
that's totally true. And also, if you want to just reach out to Linda too, she can take care of you. She'll direct you to me, and then she can help you start shopping for the house that, you know, fits your budget once you've been pre-approved.
definitely, definitely. Everybody, it was great seeing y'all again. Good seeing you, Michelle. We'll do it again here. My license number is 01997670. I will catch everybody later. Have a great day.